Welcome to another FAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over FAR Area 2, and this is Section F, this is an application topic. Calculate the carrying amount of finite-lived intangible assets reported in the financial statements, and this would include things like initial measurement, amortization, and impairment, and prepare journal entries. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, if this is the first thing you're seeing from us, make sure you go check out our free 1-hour webinar training on SuperfastCPA.com. Make sure you sign up for that because, again, it's only 1 hour, it is free, and we will teach you the key ingredients to passing the CPA exam. We will show you how to be effective and efficient with your studying so that you don't waste months or even years of your time failing exams. The link to that will be in the description, so again, make sure you go check that out. Also, just letting you know that SuperfastCPA Pro members get access to our full 10-question versions of these YouTube videos. We're only going to be going over 5 questions in today's video, but if you like this and you like our other videos, remember that SuperfastCPA Pro members get access to a whole bunch of awesome resources, again, including the full versions of these videos, where we typically go over double the amount of questions, so usually 10 questions, to get extra learning and extra practice. And so now, let's go ahead and dive into the questions. All right, here we are at question 1. Something we always like to point out is to read the last part of the question to give yourself context for the rest of the question. And this is a great habit to be in for test day because on test day, you have no idea what questions you're going to be seeing. So if you've done your studying and if you've done the learning, this will help you be able to pick out what you actually need for the question so that you can more quickly answer the questions and know what you're even supposed to do. So again, this is a good habit to be in, even if it doesn't always help in every single situation. So let's read the last sentence here. What is the total amount that should be capitalized as the initial cost of the patent? Okay, so we're trying to figure out the amount that's going to be capitalized. A company acquires a patent for a new product, which has an estimated useful life of 10 years. The following costs are incurred. They have $12,000 for legal fees to obtain the patent, $8,000 in research and development costs to create the idea being patented, $5,000 for legal fees to successfully defend the patent against an infringement claim, $3,000 in administrative costs, and $2,000 in revenue generated from the patent in its first year. So there's a lot of things going on there. We need to figure out how much of this is going to be the cost that is amortized over the useful life of this intangible asset. So think about it. If you have any idea how to do this, that's great. Go ahead and pause the video and try it on your own. If this is the first you're seeing of this, or if this is something that really confuses you, that's totally fine too, because we're going to be using these questions to learn how to do this. So let's go ahead and look at the answer for this question to start getting an understanding of what we're going over in this video. All right, the answer is A. They would have a capitalized cost of $17,000. So this is the amount that's going to be amortized over the useful life of this intangible asset. The initial measurement of a patent includes costs directly attributable to obtaining and legally defending the patent. In this case, the capitalized costs include $12,000 for legal fees to obtain the patent and $5,000 for legal fees related to a successful defense of the patent, totaling $17,000. And we're going to talk a lot more about those successful legal defense fees. We're going to talk about that in other questions, so keep that in mind. The $8,000 in R&D costs is not included in the capitalized cost, as R&D expenses are typically expensed as incurred under US GAAP. Additionally, administrative costs, the $3,000, and revenue generated from the patent, the $2,000, do not affect the capitalized cost. Thus, the correct capitalized cost is that $17,000. So basically, whatever the costs were to acquire the patent or the legal things or how much you paid for the patent or the intangible asset, those are usually going to be the things that go into this capitalized cost. The cost to research it or to develop it or whatever the case may be, those are not going to be part of it. Those were actually expensed previously. So that was kind of an introduction to this. Let's go to the next question. All right, here we are at question 2. What is the carrying amount of the patent immediately before Innovatech loses the rights to it? Okay, so that's interesting. Let's read the rest of this. So we're trying to figure out the carrying amount before they lose the rights, but we don't know what's happening. So let's read the rest. Innovatech Co. acquires a patent from another company. As part of the acquisition, Innovatech pays $15,000 in cash and transfers a piece of equipment with a carrying amount of $6,000 and a fair value of $18,000. After acquiring the patent, Innovatech faces a lawsuit from a competitor challenging the patent's validity. The court rules in favor of the competitor, resulting in Innovatech losing the rights to the patent and incurring $5,000 in legal fees as part of the lawsuit. So with all that information, again, we have to figure out what the carrying amount of the patent is immediately before they lose the rights to it. Now, based off the first question, you could probably figure out a lot of this, but you might not understand other parts of it. That's okay. If you want to give it a try, pause the video and see if you can kind of get close or get the right answer. And after that, let's go ahead and look at the answer together to learn a little bit more about what's going on here. All right, the answer is C, $33,000 is going to be the carrying amount before they lose the rights to it when they lose that lawsuit. So let's go over this. The carrying amount of the patent is determined by the total capitalized costs at the time of acquisition. Innovatech paid $15,000 in cash, so that's one part of it. That's an easy part to remember. And they transferred equipment with a fair value of $18,000. So that's one thing that you need to remember. If you ever transfer something in exchange for an intangible asset, usually you're going to be using the fair value of that transferred amount. So the cash is always at its fair value. So cash is the $15,000. Then there's the fair value of the equipment that was transferred. That's $18,000. For accounting purposes, the fair value of the transferred equipment is used rather than its carrying amount. So I kind of just explained that. Therefore, the initial capitalized cost of the patent is that $15,000 plus that $18,000. So $33,000. That's how much the patent was being carried at before they had this lawsuit. The carrying amount remains at $33,000 up until the point when Innovatech loses the rights to the patent due to the lawsuit. Although the legal fees of $5,000 relate to the lawsuit, remember we kind of talked about that in the first question, they are not capitalized since the lawsuit resulted in a loss of rights rather than a successful defense. As a result, the carrying amount of the patent right before losing the rights remains at $33,000. So we didn't take into account that $5,000. Let's read a little bit more. If Innovatech had instead won the lawsuit, the $5,000 in legal fees would have been added to the carrying amount of $33,000, resulting in a carrying amount, excluding amortization, we're not taking into account amortization at this moment, of $38,000. So that's a key point that you need to know right there. When a lawsuit happens in defense of an intangible asset, usually it's a patent, but it could be like maybe a trademark as well. If you lose that lawsuit, then not only are you losing the right to whatever that intangible asset is, and that could affect the carrying amount, but also the legal fees associated with it are not going to be added to the carrying amount. Whereas if you have a successful lawsuit defense, that actually is added, that is actually capitalized along with the carrying amount that there was previously. So like I was saying there, if they had successfully defended the patent, that $5,000 of legal fees would have also started being capitalized. And the way you do that is you just add it to the carrying amount that there was previously. So $33,000 plus the $5,000, it would have been at $38,000. It's not capitalized separately. It is added to the carrying amount. So just make sure you know that. But we've gone over a good amount of stuff for figuring out the initial measurement or figuring out the carrying amount of the asset before taking into account any amortization. Now let's go to question 3 to start talking about amortization. All right, here we are at question 3. Again, we're going to start talking about amortization here. Let's read the last part. What is the annual amortization expense that Technica should record for the intangible asset? Okay, let's go up to the top here. Technica Corp acquires a new intangible asset. As part of the acquisition, Technica pays $18,000 in cash and transfers machinery with a carrying amount of $3,000 and a fair value of $9,000. Additionally, Technica incurs $4,000 in registration fees to gain ownership of the asset. The asset has a legal life of 20 years, but Technica expects to generate economic benefits from the asset for only 10 years. At the end of its useful life, Technica estimates it can sell the asset for $2,000. So with all that information, what is the annual amortization expense that they're going to be recording each year for this intangible asset? So there's a lot going on here. Based off what we've learned so far, you might be able to kind of piece this together, kind of pick it apart. If you have no idea, that's okay. Again, we're using these questions to learn. So if you want to give it a try, pause the video and give it a try yourself. If not, let's go ahead and look at the answer. All right, here we are. The answer is A, $2,900 is going to be the amortization expense each year. Now, let's walk through this there's a few different factors that we are learning in this question, so we're going to go over each one of them. Let's start with at the beginning. To calculate the annual amortization expense, we first determine the total capitalized cost of the intangible asset, and then we calculate the amortizable amount, which that's pretty much the same thing, but you might need to take into account this residual value. Finally, we determine the appropriate useful life to use for amortization, which is the lesser of the legal life and economic life. That's a very key, important rule. We're going to talk about it a little bit more, but you amortize these based off of the lesser of the legal or the economic life. So we're going to talk about that. Let's dive into this. So to figure out the amortizable amount, you have to take the cash that was paid, the fair value of the machinery that was transferred, the legal fees that there were to defend the patent. Again, remember, if you successfully defend the patent, those legal fees are added to the carrying amount. And then they are expecting to be able to sell this for $2,000 at the very end of its useful life. So it's kind of like a salvage value for depreciation. This residual value we're going to subtract from the rest of the amounts to get the actual amortizable cost. So $18,000 plus $9,000 plus $4,000 less $2,000 is $29,000. That's the amount that's going to be amortized over the useful life. And the useful life, we're going to talk about that right here. Amortization is based on the lesser of the legal life or the economic life. So even though the legal life is 20 years, even though the patent has a legal life of 20 years, for accounting purposes, they're only expecting to get economic benefit from this patent for 10 years. So that's the amount of years that we're going to use to amortize this patent. So $29,000 divided by 10 years is $2,900 of amortization that's going to be happening each year. So not too difficult once you kind of see how things fit together. This is honestly quite a simple concept, except for the fact that there's a lot of little pieces that can kind of come into play. So you just kind of have to pay attention to the things that are said in the question. But overall, we figured out the amortizable amount, and we figured out what the useful life actually is out of the legal life or the economic life, and we were able to use that to figure out the amortization expense. All right, with that, let's go to the next question. All right, here we are at question 4. What is the annual amortization expense for the trademark? Okay, again, we're doing an amortization. Let's talk about this. Luminous Brands acquires the rights to a trademark for a new product line for $60,000 with an additional $5,000 spent on legal fees to secure the trademark. The trademark has an initial legal life of 10 years. Luminous Brands plans to spend $2,000 every 10 years to renew the trademark as long as the product line remains profitable. The company is confident that the brand's reputation will stay strong, and they have a long-term strategy to continue investing in the trademark indefinitely. What is the annual amortization expense for the trademark? If you have a guess as to how much the amortization is going to be, or if you want to give it a try yourself based off what we learned before, that's great. Pause the video and come back when you're ready, and we'll look at the answer together. All right, here we are. The answer is D. They would actually have $0 of amortization expense for this trademark each year. So why is that the case? Let's talk about it. While the trademark does have an initial legal life of 10 years, so if they weren't going to do what we're about to talk about, then that would be the useful life. Luminous Brands intends to renew it every 10 years for as long as the brand remains profitable, potentially extending its life indefinitely. Because Luminous Brands has a strategy and reasonable expectation that the trademark will continue to provide economic benefits without a foreseeable end, the trademark is considered an indefinite-lived intangible asset, which means it will not be amortized annually. So that is the key difference of what we're talking about here. We are talking about finite-lived intangible assets, which means they have a limited useful life. But if you ever see an intangible asset that they're planning on just renewing for as long as they possibly can, meaning that the life can kind of be indefinite, like it could last forever, then that means that you can't amortize it because you can't amortize an unknown amount. So with that in mind, let's kind of shed a little bit more light on what we've been talking about this whole video, which is finite-lived intangible assets. Finite-lived intangible assets are those that are expected to provide economic benefits for a specific limited period. Common examples include patents, we've talked a lot about patents, and copyrights. Other examples include franchise agreements with fixed terms, customer contracts that are amortized over their remaining periods, and licenses or permits with expiration dates. These assets are amortized over their useful life to reflect their gradual consumption or expiration over time. So there are a lot of intangible assets, but we've been specifically talking about finite-lived intangible assets. But there are other intangible assets that have no specific lifetime. If you can renew it forever, then it has an indefinite life. And there are other intangible assets that you don't amortize. So just remember that if you're ever dealing with intangible assets, pay attention to if it has a useful life and if it's a kind of asset that will eventually fade and they won't be able to get economic benefit from it anymore. So pay attention to that. That's what we've been talking about this whole time. And I hope that kind of helped clear up a couple things. Now let's go to question 5. All right, here we are at question 5. What amount of impairment loss should TechFuture record? Okay, so this is a little bit different than what we've talked about before. Let's go up to the top. On January 1st, TechFuture Inc. acquires a patent for $92,750, also incurring $11,300 in legal fees to secure the patent. The patent has a legal life of 20 years. By the way, that's the typical legal life of a patent, but it is expected to provide economic benefits for only 12 years, with no residual value at the end. After 5 years, a competitor develops a more advanced technology, significantly reducing the patent's value. The fair value of the patent is now estimated to be $14,200. What amount of impairment loss should TechFuture record? Okay, so this shouldn't be too difficult based on what we've learned before and maybe what you've learned in other videos. I bet you could figure this out just based on what you might know about impairment losses. If you have no idea, that's okay. We'll look at it together in a second, but I think that a lot of you could figure this out based off what we've learned in the previous questions. And again, if you've watched any of the other videos, I bet you could figure this out. So go ahead and pause the video, try it on your own, and when you're ready, come back, we'll look at it together. All right, here we are. The answer is C. $46,496 is the impairment loss that's going to be recognized for this intangible asset. So let's talk about this. We have to figure out how much the carrying amount of the asset was before it got impaired. So let's figure that all out. The initial capitalized cost of the patent is $104,050, which includes the purchase price, the $92,750, and the legal fees, $11,300. So we add those together, and that's $104,050. Now, we have to figure out the amortization that has happened so far. The useful life is 12 years because they are only expecting to get economic benefit from this for 12 years instead of the full 20 years, which is the legal life. So $104,050 divided by 12 gives you $8,670.83 that's going to be amortized each year for the 12 years. You multiply that by the 5 years that have passed, and that gives you $43,354.17 of amortization that is taking place. So the carrying amount of the intangible asset at this point, before we take into account the impairment, is $60,695.83. Now, it told us that the fair value of the patent is now expected to be $14,200. So it's not totally impaired to the point where this patent is completely useless, but it is impaired to a much lesser amount. So you subtract the $14,200 from the $60,695.83, and that gives you a $46,495.83, or really a $46,496 impairment loss to get the carrying amount of the intangible asset down to the $14,200 that it now is expected to be at. So we're not talking about like the future years amortization or anything like that. We're not diving into that, but you need to know how to calculate an impairment for an intangible asset that has a finite life. We're not talking about goodwill here. We're talking about specifically finite-lived intangible assets like patents, copyrights, trademarks, things like that. All right. We've learned a lot in just 5 questions. Before we go any further, let's do one more part of the SuperFast CPA process called pillar topics. So the idea behind pillar topics is as you're going through the questions, you will notice the things, the concepts, the calculations, the equations that keep popping up in the questions. You've seen 4 questions trying to teach you how to calculate the amortization based off of an intangible asset that has a finite life. Or you've seen 3 questions trying to teach you how to calculate an impairment loss for a finite-lived intangible asset. Or maybe you've seen multiple questions trying to teach you the difference between the legal and the economic life so that you use the useful life for the intangible asset. Things like that. These are kind of things that pop up, and you've done them multiple times in the questions, so you know they are important. So you take a moment and you write out these pillar topics in your own words, kind of summarizing the most important things that you've learned so that you, as you're going each day, you will be building the pillar topics, the most important things that you need to know from the questions, and you're kind of building this repository as you go so that by the time you get to the exam, you have this list, kind of this small summary of the most important things that you need to know for the exam. And with all that, let's go to the pillar topics for this video. All right, here we are at the pillar topics. So let's just go over these again. This is kind of a summary of everything we just learned. So remember, with the initial measurement exclusions, these are the things that are not going to be included in the initial measurement of an intangible asset. Costs like research and development, franchise and operational revenue, development costs, and unsuccessful legal defenses are not included in the initial or the subsequent measurements of an intangible asset. So these are not going to be a part of the amortized amount. But on the other side, there are things that are going to be included in the initial measurement. These are things like cash paid for the acquisition, the fair value of any exchanged property for the acquisition, legal fees for obtaining the asset. Also, remember, this is something that I want you to remember, costs for successful legal defenses, not unsuccessful, but successful legal defenses are added to the carrying amount. Oh, looks like I misspelled that right there. But again, you're supposed to be adding those to the carrying amount, not capitalized separately. So even though these successful legal defenses are going to be capitalized, the way that you capitalize them is you just add them to the carrying amount of that intangible asset. So don't forget that. And then as far as figuring out the amortization basis for intangible assets are amortized over the lesser of their legal life or the period over which they are expected to generate economic benefits. Remember also that the salvage value, like the residual value, if any, is considered in the amortization calculation. And if you didn't notice this in the questions, I didn't really mention it specifically because it's kind of implied based on what we just did. But the straight line method is almost always used for these amortization of finite-lived intangible assets. I think it would be pretty rare that you would see something that wasn't straight line. And if it wasn't straight line, you would be told that you're not using straight line. So almost always you're going to be using straight line method for these amortization calculations. And one thing that we talked about a little bit to make sure that you know the difference, there is such a thing as indefinite-lived intangible assets. Assets that can be renewed indefinitely, like trademarks with continual renewal, are not considered finite-lived and are not subject to amortization, but are instead tested annually for impairment. And we're not going to really dive into that. I just wanted to let you know there are assets that do have an indefinite life, so you don't know how much you need to amortize, so you can't amortize those year to year. And then finally, you may also need to know this, you may need to be able to calculate an impairment loss. To calculate an impairment loss, you subtract the fair value of the asset from its carrying amount when an event or a change in circumstances permanently reduces its value. And that will give you the impairment that you need to know for that intangible asset. And with all that, we've gone over the pillar topics and we've gone over a lot in this video. And that's pretty much the end of the video. Before you go, make sure you check out our free 1-hour webinar training on SuperfastCPA.com. Again, make sure you go sign up for that because we will teach you the key ingredients to passing the CPA exam in just 1 hour for free. And after you do that, you'll probably want to learn more. And if you decide to buy the Pro bundle, remember that Pro members of SuperfastCPA get access to the full 10-question video versions of these 5-question YouTube versions so that they can get more practice and more understanding for these topics. So again, if you become a SuperfastCPA Pro member, you get access to a whole bunch of awesome resources, including the full versions of these videos. If you liked this, make sure to like it and leave a comment. I hope this was helpful. And with all that, thanks for watching. I will see you in the next video.